Hello everyone, I hope you're all doing well today. It is Apex here with another video. Today we'll be looking over 5 trades that I've taken over the last few months that have led to tremendous returns for myself. Similarly to the approach that I'm taking on the Twitter page, where I'm looking over winning trades and the reasons why they did so well and the patterns and technical cues that I engaged with. I think it is just as beneficial, if not more, to analyze these trades in a video format. I personally have always learned best looking through videos. I think it's just a little bit more relatable. Seeing the patterns develop real time is always a nice benefit as opposed to just reading a tweet compressed into 250 characters. So, yeah, I think this will be a great opportunity for both of us to learn and educate ourselves. Obviously, this is purely for educational purposes only. This is not financial advice. You should come up with your own trading strategy before putting any real money on the line. So without further ado, we'll get into it. So looking at EXPI, NET, PENN, NIO, and Tesla today. All trades taken over the last couple months. So the first one, EXPI. I was watching this stock throughout November, and I had noted that we saw this beautiful triangle pattern here. So the first indicator that I always look to is volume. EXPI has volume that is seldom seen in the financial markets, or only really when there is tremendous value behind the company. And as you can see here, all we seem to have are bull volume nodes. We had a strong earnings release just before the breakout, which is always nice to see, act as a catalyst. But the main reason that I was watching this stock was the indicator that you see at the bottom of the screen. Now, as I said, it's set up in this nice triangle pattern. There was a previous breakout. So there's a previous breakout that took place in September, nice strong rally, and price was retesting that breakout zone for the first time since. Whenever Whenever a resistance is broken, it then typically acts as support into the future. Same with support. Whenever support is broken, it typically acts as resistance in the future. This is a timeless technical analysis indicator, and it's always perceived as a good thing. So when you see that previous resistance turn support now being retested by price action, you're expecting a bounce. That's exactly what we got here. So we had this development, this consolidative development, form into a triangle pattern. Like I said, great volume, and then we started to see a breakout. So when I'm looking for a breakout, I zoom in on the hourly chart. Now, what I want to see is a number of things. Firstly, I do want to see that hourly uptrend. An hourly, daily, 4-hour, whatever time frame you're looking at, an uptrend is signified by a high, an impulse move up, a higher low compared to this pivot low down here. Bulls buy that dip and break the pivot high. This is how you confirm an uptrend. Now, when you see an hourly uptrend form, that typically means that price action on the daily chart is in a bounce, short-term uptrend. Now, what do we have here? We have a strong impulse move up on the hourly chart, a higher low compared to this pivot low. Bulls bought that dip, and then we see a break of the high. Hourly trend change confirmed. So that would be step number one. Step number two is to see volume on the breakout. We see a strong volume node come through as soon as we break out of this pattern. As we were at the apex, couldn't get any tighter in consolidation. Hourly uptrend confirmed, volume confirmed. Now I could enter on this candle and be comfortable. Just wait for that high to break. Even if you are kind of caught at the top, little pullback, possibly an approach you could take would be averaging in, decreasing your cost basis, which is a good approach considering the technicals around this stock. But overall, you see that strong hourly candle come in, close above the pivot high here. That's your first cue to enter. Any pullbacks, ladder in more entries. And then what do we see on the daily chart? So I'll take us out of this time constraint. And we see fabulous uptrend continuation on the daily chart, all from this breakout here. Now, as soon as price was breaking out, the first step was to find price targets of confluence. So taking it from this pivot low here up to the pivot high over here, using this impulse wave as a guide higher, we see the price targets of low 70s to 80s all the way up to 91. Now we've blown past that. That's what happens when you see this much volume enter into a breakout. But you can see how these Fibonacci targets acted as the primary area in which price began to pull back. So it's pretty spooky how accurate these Fibonacci targets can be. But this was the first trade that I will review today. It was a nice payday for myself. And that's how you build a technical hypothesis as to where you want to enter and how. Next trade looking at today is net. So focusing on this breakout here. So we had this explosion of volume as we broke out of this resistance area here. I'm actually not too sure what caused that. That could have been a news catalyst on top of a technical breakout getting over some of these highs here. But nonetheless, we had this tremendous amount of volume flood in, and then we began a multi-session, multi-week pullback, which appears to embody a bull flag. So a strong impulse move up, and then we get that outer flag of consolidation. And another sign that we can look to signify legitimacy within this pullback is the low volume that is mounting in the volume nodes during the flag period. So typically what I like to see in any breakout is a strong impulse move up, allow this line to signify price action, and then we see strong volume, allow this to signify volume. And then on the pullback, as we consolidate through the flag, prices ranging ups and downs, lower highs, higher lows, yada, 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 we see decreasing volume. As curly drawn as that is, hopefully you get the idea. So here is that impulse in volume, here's that impulse in price action, and then we have the decrease in volume as we range through the flag. Key sign for technical confluence, that price will likely go higher. So then what's next? We look in on the hourly chart. So as price starts to creep out, we want to zoom in on the hourly chart to see that hourly bull flag being set. So zooming in here, well, what do we get? We get this strong gap up impulse, consolidation, and then we break above, and then we see a nice flood of money come through. Let's try to zoom in a little bit better here, allow you guys to see it as clearly as possible. So we have a big gap up outside of the pattern. Bulls like buying these gap ups as they signify strength. Strong impulse move, and then into a bull flag pattern the next day, gap up, and then we see more continuation. Although this candle can be deceiving, we see slight inclination higher, 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 and then an explosion up. So that's encapsulated through this consolidation here. We see price break above the pattern on the daily chart, nice hourly or nice daily candle close above. It is leading into an earnings report. So technically I shouldn't have even been trading this. I was just very ambitious about it, and I do not recommend trading a stock before earnings. But if you're going to do it, make sure that all the technical confluence is there. We had this tremendous volume, which is, you can't ignore this volume when you see something like this. So you have to assume that there is going to be a good reaction to earnings. So you enter in small, and then we see these gap ups. Ultimately, this led to a tremendous move over the next couple months of 50%. All started looking at the daily chart, identifying that volume, identifying the pattern, identifying the low volume within the pattern, zooming in on the hourly chart, we see that hourly bull flag, and then we get more continuation higher. The next stock that I am looking at is PENN. So PENN, this online gaming sentiment that has overcome the markets and a lot of individuals. I know the New York governor was talking about how online gaming is going, or sorry, online sports betting is going to be a driver in economic recovery over the next couple months because of coronavirus. So that alone implies that there is a tremendous fundamental sentiment for these types of individual names. So looking at PENN here, well, we can see that the first indication for continuation that I always use is the volume. Again, we see massive volume nodes throughout this entire consolidation, throughout this entire uptrend. Respecting this broader trend line, we have this very long ascending triangle. Again, that ascending triangle marked by a clear resistance that price can't get over and higher lows as we approach that resistance until we break out. So that alone to me signified between the volume and the pattern that this had a potential to break out. So we almost have a quad top, one peak here, two, three, four, technically five peaks. So there was a lot of power behind this breakout. So the breakout took place here. Again, what do we look for? So we have the volume in our favor, we have the pattern in our favor. Now we need those hourly patterns to signify a breakout. So we almost have a breakout here. And again, this is ideally what I want to see. Strong impulse move on the hourly chart, changing the daily trend to bullish, and strong hourly breakout volume. So we get the impulse move up, consolidate for a number of days, another impulse move up, and then we just continuously rip higher. So that is the cue for the entry. Again, zooming in on the hourly chart, looking for those bull flags, looking for them to break, and strong hourly volume to come in, excuse me, when they do break. That's the cue to entry. Then we got more continuation higher, pulled back, retested the breakout area, bulls bought the dip, still in that daily uptrend. High, higher low, break of the pivot high. So things are looking very healthy for the bulls in this stock. But it all began by gauging this hourly breakout when we got it. Now for me, I didn't use Fibonacci targets to really derive one. I found it a little bit difficult to pinpoint the pivot high and low. So as soon as we got this breakout, I was just looking to take profit a little bit before the $100 psychological level. Took profit here on December 23rd. The high was 99.24. I think I got a sell around 99, just using those psychological numbers and that experience in my favor. But again, you can see the consistencies in these patterns and how they break out. NIO, similar idea. So I'm actually still in this position. I think it looks incredible. We see this breakout, pull back. So we see the breakout, strong breakout, pull back to the previous resistance level, pause for a couple of days. Now we see increasing volume as we bounce off that pivot high. So I think this has room to run. There's been analyst upgrades of 75 and 80. So I think it could surpass that, maybe even hit $100. Again, not financial advice, but I'm very optimistic about EVs and in particular NIO. So anyway, in this pattern, we see a strong impulse move. NIO has been breaking out consistently. I think I've traded this stock 5 times over since October, basically. So we see a strong impulse move up, then we enter into a bull pennant and then breakout. Now the volume pattern isn't the best, but you do see, I mean, these huge volume bars of confluence throughout this entire consolidative phase and the uptrend phase. And we know the EV sector is red hot and NIO continues to break out. All we need to signify that for precedent purposes is Tesla. When last year all it did was squeeze consistently, people thought it was breaking through price targets. Oh, it can only reach X amount, it can only reach X amount, and it continued to break out higher. So there's just so much hype and euphoria, so much short interest in these names as people keep trying to call it top, but they aren't learning that the EV sector does not have a ceiling right now. So anyway, that's fuel to the fire for the bulls, and we can derive a very fundamental analysis correlated with strong technicals to assume that any breakout is going to have significant uptrend to it. So zooming in on the hourly chart, okay, so we get this strong impulse move out. Now, it's hard to find an entry in here. You could use this January 4th gap up as a potential sign for an entry. Whenever you see the breakout, we do have a bit of an hourly pullback here. Strong impulse move, brief pullback, and then gap up, technically breaking over that pivot high, signifying the hourly trend change. So you could just buy that gap up, potentially. We see the strong volume coming in at the end of that hour. But then we have this nice consolidation before continuation on the hourly chart, giving you plenty of opportunities to enter into the dips, again, using those EMAs, very well respected. Entry here, we dip below, but then gap up above, entry there. So plenty of spaces to get those hourly dip entries, but again, looking for that bull flag type pattern and then continuation higher. So looking at a price target potential for NIO, using the Fibonacci extensions, we're taking it from this pivot low to the pivot high. Very clear impulse move here. And the first target was hit on the 11th of January. So I didn't take profit on this trade. I bought in, I believe, around 45. Tried to get ads into this dip. Could not get any fills. Unfortunate. But nonetheless, letting it ride out. The first target was that 65 level, 64, 68, but right around that 65 level, we pull back nicely from there. So I'm anticipating a $75 move on this stock, which I think is very doable. But again, I hope you're getting the idea, looking at volume, looking at the pattern, looking at fundamental reasons as well, and then zooming in on that hourly chart to see the bull flag wherever it comes in. That's a horrible bull flag, but seeing wherever that bull flag comes in and then adding into those dips, adding into those breakouts, and confirming our hypothesis with the volume that comes in. So the last one I will look at today is Tesla. So in particular, as I'm sure many of you remember, this broader pattern that had been developing for a number of weeks, number of months even. So Tesla got news that they were being added to the S&P 500, nice bullish catalyst. We saw this gap up overnight, pullback, and then continuation from there since it hasn't stopped. But let's break it down. So Tesla obviously has the fundamental reason. We have the EV sector top dog. This is the lead stock that everyone uses in the EV sector as reference. We have great accumulation volume within this pattern. We have a strong impulse move and weeks of consolidation. Again, what do we see in this pattern? We see declining volume overall throughout this entire consolidation, and then we see a spike as soon as we break out. So all of these factors coincide with huge potential returns. So zooming in on the hourly chart, we get the gap up open as the news was released after hours. Huge gap up, brief pullback. We get a strong hourly impulse move. Then we get this flag. Then the next day we get a gap up. So technically we could be looking to enter into that gap up. Not the best entry as it is kind of high in this pattern here. We could use this daily bar once we get a nice candle close above it, just entering in through that. We have massive volume, as you can see, coming in through this candle. But any means necessary that you can put together to find an entry. We have that strong impulse move, pull back. You could be entering into here, or as soon as you see this volume start coming in. It kind of did a red to green, right? We had this pullback, lower high, higher low, and then breakout. Nice big volume coming in. So using any technical confluence that you can muster, it's not a clear bull flag here, but there is that technical pattern of impulse, low, lower high, higher low, and then breakout with the volume. So any means necessary to enter that trade because it did produce a tremendous amount of return. So using these price targets, so we have this beautiful impulse move up. So we're taking it from the pivot low to the pivot high. And we get a great confluence right around that $600 psychological level, which is where I took profit. So we get the breakout and taking it right up to 600. Got a nice 30% win on that trade. So overall, it was very, very nice. So I hope you guys enjoyed this video and I hope you enjoy the series that I'm putting together here. I think it is a lot more educational, as I said, for both you and I. I like talking about this stuff. I think it reinforces these good habits. And I think it's just a little bit more interactive with you as the viewer to see and hear my thought process real time as opposed to just reading a tweet. So please feel free to give me any feedback as to what you think I could improve on or what you want to see in the future. Hope you enjoyed the video and have yourselves a great day.